And thank you for joining us for today's webinar, where we will learn how community banks can compete in the shift to digital. My name is Sean O'Brien, the president of Quick Rate, and I am pleased to be joined by a panel of experts to discuss this timely and important topic. A couple of reminders before we get started. Any questions you have, please submit those using the Q&A button or chat feature throughout the presentation today. To get the conversation started, we are going to supply a few questions to the chat. They are: what are your bank's key digital priorities for 2022? What are your key tech projects that you're implementing now or during the second half of 2022? And then, do you see other community banks, mega banks, big tech, or fintechs as your key competitors? Finally, just a couple of reminders. We will send out an email with a link to the recording today. We'll also send out a survey with these and additional questions that will help us better formulate future and upcoming webinars and future topics. So at this point, I'm going to get out of the way and pass the presentation to Kevin, who will be our moderator today. Kevin?
Thanks, Sean. Hi, everyone. I'm Kevin Jacks, and I will be your very fortunate moderator today. We have a great panel. We're looking forward to diving into the topic about how community banks can better compete in the shift to digital. But before diving into that, our kind friends at Quick Rate are allowing me as the moderator to spend just a couple minutes introducing my fund. I am a partner at Coda Fintech Ventures, and we think we're an exceptionally well-positioned early-stage venture capital fund that can provide advice and insights to help banks navigate in the shift to digital. Why is that the case? We're experienced investors, 30 plus combined years of fintech investing experience on our team. We have a strong track record, 15 fintech unicorns. We've been strategic LPs, investors in funds ourselves, and we think that gives us both empathy and experience in how to effectively share insights with you as leaders at the banks. And finally, we can help you tap into what we think is an outstanding advisor network that we've assembled. I'll go through this very quickly so we can get into the panel. I'm one of 3 partners managing the fund. My partner, Ben, has 20 years of fintech investment experience. He's been with the investment arm, the venture investment arm of Fidelity, a significant amount of time at Capital One, also Bank of America. I have 10 years combined experience from Visa and Intuit, and our partner, Bobby, early employee at Oracle and founded a company, took it public, also the managing director of Coda Capital. As we noted, 15 fintech unicorns in our combined track records. Now, as we get into the panel today, we'll note that there's a number of challenges banks face in navigating the shift to digital. You've got to set the right priorities. You've got to successfully manage projects to completion. But I think one of the biggest challenges is picking the right partners to help you put in place the digital capabilities that are important for you. We've had a lot of experience doing this, a number of great investments in payments and bank tech. Coda has a very strong financial record doing it. We think this guidance, help, and advice can help you pick the partners that'll be there not just 5 years from now, but thriving 10 years from now, so that you have durable partnerships and great platforms to build on. As I noted, we ourselves have been strategic investors or corporate investors into funds ourselves. We're leveraging that experience to provide a menu of mechanisms to help you and your leadership teams digest those insights, from pipeline reviews to quarterly reviews to events and webinars. And we're fortunate to be able to involve great advisors in our network. Here's an example of some of those events that we put on earlier this year and last year. I've mentioned the great advisor network. They're senior leaders at some fantastic companies in fintech, from Revolut to Visa to Amex, to even our fellow panelists, Jason Hendricks and Alloy Labs, representing the interests of many community banks. So for any banks with interest, please feel free to reach out to Ben and myself. We'll be hosting a webinar on April 5th to tell you more about our fund. Now, before we get into the panel itself, I thought I'd start out with some interesting statistics that I think paint a very optimistic or provide a bit of an optimistic message. So on March 1st, Forbes ran an article authored by Ron Shevlin from Cornerstone Advisors, looking at primary checking account market share for key players across the United States. And he was sharing research that Cornerstone had done, 3 waves of research, roughly 9 months apart each. And one of the very surprising outcomes of that research, or not surprising, was that neobanks or digital banks have gone from being the challengers to perhaps the incumbents. Many millennials and Gen Z now have accounts at those banks. The market share they've taken, however, has actually come from the mega banks. And I think encouragingly, community banks have picked up market share in primary checking accounts across all age segments, with credit unions not doing so well. Part of the reason that many community banks might be enjoying that resurgence, I think, is due to the work of the panelists we've assembled today. So let's get into telling you more about our panel. In alphabetical order, we have Alan Rayson, the Chief Innovation Officer, Encore Bank. Alan, for those that don't know Encore, maybe you could share with us just a couple of minutes about Encore and what you do.
Yeah, of course. I appreciate the opportunity. Kevin, it's good to see you. Jason, Dion, it's good to see you as well. Appreciate the opportunity to be here today. Encore, our claim to fame is that we are among the fastest growing banks in the country today, if not the fastest. That's pretty unique for a bank, which obviously creates challenges on technology and other things when a bank or an FI is growing as fast as we are. But there's a couple things that we'll talk about today that we would attribute that growth to. We're doing some pretty unique things in the ways that the way that we deliver digital and raise capital and things like that. But Encore is based out of Little Rock, Arkansas. Great place, beautiful place that I spend a lot of time at. And our innovation hub is here in Austin, which is where I am, and what I'm responsible for within the kind of technology and innovation thesis for Encore, which is, I wouldn't call us digital native, but we are certainly relatively close to that. We don't necessarily have branches and the old model of delivery. The majority of what we do skews towards the commercial side of banking, admittedly, but mostly through that digital channel. So I look forward to talking more about it today. Thanks for allowing me to be here.
Thanks, Alan. Next, Dion Lyle. Dion, you recently took over as the Chief Innovation Officer at Huntington Bank. Previously, you were the founder and managing director of a consulting firm that helped community banks navigate the shift to digital. Maybe you can share a little bit more about your role in both.
Yeah, that's right. First, Kevin, thank you for having me and giving me a promotion to Chief Innovation Officer. I'm actually the Director of Corporate Ventures at Huntington, but I appreciate the promotion, and hopefully it comes with a pay raise. So yeah, my journey in independent consulting went from first head of Fintech at Capgemini, started my own consulting firm called Cherry 25, working primarily with larger organizations. And then for a year, I worked with some investment bankers out of LA to build 40 Grand, which was 100% focused on helping community banks get digital. Then I had an opportunity to join Huntington, a large bank, and I really enjoy the camaraderie, the culture at Huntington, but also the bank size. It's not a money center, City, Wells, but it's also not a $1 billion institution. It's kind of in between at $275 billion. But Jason and I have had some good conversations about how to help these community banks, and I think today's panel is really going to point you in some actionable directions, not just strategy.
Thanks, Dion. And finally, Jason Hendricks. Jason is the CEO and founder of the Alloy Labs Alliance. Jason, maybe you can tell us a bit more about Alloy Labs.
This is where I have to insert disclaimers. I'm both a advisor to Coda and also an LP. So I have a pretty vested interest and believe pretty strongly in what you guys are doing. Alloy Labs is a consortium of community and mid-sized banks that work together to operationalize innovation through strategic partnerships and investments in those partnerships. By combined assets, we are about the 23rd largest bank in the country, which gives us a level of scale. And we skew towards some of the most innovative banks that are willing to roll up their sleeves and say, in order to not only survive, but to thrive, we need to rethink how we do things. And that's everything through our 8 centers of excellence that cover everything from cybersecurity to launching a distributed autonomous organization, better known as a DAO in the NFT world, for doing loan syndication. And then we also make strategic investments. We have a $25 million fund that is meant to actually invest alongside some of the leading venture capital funds that are focused on things that really will be reinventing banking as opposed to just replumbing banking.
Thank you, Jason. Now, for the audience, before we dive into the first question, let me remind everyone, the panel is very interested in receiving questions, kind of as we go. So as we're discussing questions, if you'd like panelists to go deeper in a specific area, please just jump on the chat and pose it in Q&A, and we'll do our best to steer it into the conversation real time. So Alan, Dion, and Jason, our first question is, what are some of the highest impact projects or new capabilities that you think community banks can implement today to grow their business? And, if possible, can you provide examples either from your bank or from some of the banks and clients that you work with?
Yeah, I'll take that. So really, I think digital onboarding. Where does it start but on onboarding, right? And a lot of the community banks I've talked to over the last year plus really hadn't solved for digital onboarding yet. So first thing I tell people, that's the first touch point of a bank. Fix that and get people used to dealing with your institution digitally, and then other pieces will follow. But I always recommend first project out of the gate, digital onboarding.
I think that's a great point. I'll just kind of key on something Dion said. Within Encore, we have between 12 and 20 entry points for a user or a client. I don't think that makes us unique in any way, but it makes us a rapidly growing kind of community and regional bank. But when you think about those entry points from a just standard UI UX perspective, you want that onboarding experience to be top notch. And admittedly, historically, banks have not necessarily delivered that top notch experience. But to Dion's point, that digital onboarding, whether it's through a commercial channel or a consumer channel or a treasury channel, really could use improvement in the industry. So I think he's spot on with that.
Can I be the contrarian and say to both of you, hey, come on, Dion and I also just have to mix it up.
I knew this was coming, Jason. Go.
I think digital onboarding is essential, but it's also quickly becoming table stakes. If you don't have it, you need a team working on it as quickly as possible, but also don't stop there. If, when we talk to banks, we hear, what's your innovation strategy? We're implementing CRM, or, we're doing a digital application for the loan. Yes, you need to go do those things, but that is actually just the beginning. That you need to start focusing on placing bets in other things that will help you move forward. That if you look at your peer set, we hear this all the time, is, we're really more of a fast follower. My partner JP is fond of saying most community banks are in a race to be first to be second, right? You don't want to be out ahead, but if your peer group is other banks or the bank across the seat, you're in a losing race, because the true competition now, it isn't just the big banks, it is the fintech focused players. It is adjacent spaces, the Amazons, even the Starbucks of the world are stealing some of your deposits, right? In terms of where you keep money. And so when you talk about being a fast follower, be cognizant of who you're following. This isn't just trying to check every box. Do I have all of the features of another bank of about my size? You need to find places to go differentiate.
Yeah, but don't forget, Jason, the question was, what's the first project, right? And that is the first project. And how many banks have you met that haven't fixed digital onboarding yet, right?
True. So I would argue you can't just do one thing, right?
No,
that I would mix
fair.
up. Fair. And I would say if you're going to pick the most impactful, though, even above digital onboarding, I would focus on data availability. right? Actually being able to get the data. And I think that will directly feed your ability to do better onboarding and targeting and better understanding. As banks, we love to say, especially in the community end, what's your strategic advantage? Oh, it's our relationship with our customers, right? Well, relationship doesn't mean you're personable. Relationship means I really understand you. And I only can really understand you if I understand your data. Then I can understand you better than you even maybe understand yourself.
Let's take these one at a time, if we might. So Alan, if I haven't yet, I'm the CFO at a bank and I haven't yet implemented streamlined digital onboarding. What were some of the benefits that Encore has achieved by doing this across that, for 20 entry points you mentioned into the bank? How should I think about penciling in the benefits and justifying making that investment?
There's a lot you could talk about there. I mean, our model is pretty unique at Encore. We have a number of different investor partners across the 7 or 8 states that we're in, across the southeastern part of the United States, and we really focus on primarily banking those investor partners. And what we have positioned to them is the experience, for sure, and being able to deliver that in a digital channel. But you start to think about those entry points, and to Jason's point, where data is being input or entered, and what ultimately gets done with that data. But some of the simpler things that I think banks can be looking at, and certainly users should be keyed on is, as I come into a bank through a digital channel and become a customer on the commercial side, what's my experience through the rest of the product set. You start to think about treasury. If your users are going in and entering information, again, these are simple things, but going in and entering information multiple times in multiple different places, and it's the same information over and over and over, that experience deteriorates pretty fast. And then to Jason's point earlier, what are we doing with that data, and how are we creating that client experience, kind of curating that client experience based on the information that we have in that onboarding process. But one thing I would add is, I think one of the big takeaways for maybe our audience today, and I know we've got a pretty diverse audience, but we tend to think about technology in 2 kind of separate and distinct buckets. One is operational technology. What does it take to really run the bank at a high level from a tech perspective, and then the other is really transformational technology. And in my opinion, all of our audience needs to find that balance. Operational is super important, but transformational is what's gonna keep you at the front of the pack from an experience standpoint.
Can I build on that for a second, Kevin?
Absolutely.
I love the
Jason.
2 buckets, and I would think you need to approach them differently. The operational bucket that Alan talked about, you can run projects, right? They have long time frames and well-documented ROIs that you understand, and had a longer kind of reach associated with it. But just don't expect that when you run these bigger projects that magically the results are going to change, right? No one has ever changed their core and said, oh, we've unlocked 35% year-on-year growth. Not that you don't need to change your core in order to have better access to data and APIs. And then I'd say for those transformational things, don't think of those as projects per se. Think of them as experiments, and that requires a much different mindset. That it isn't about just picking the right vendor and running with it. Hellbent that like 2 years from now, we're going to have it live. Think of it as a series of, what is the first step I can take to validate that this is a good and new idea? And you have to go in new directions if you're expecting different results. It's kind of like,
that's great.
My weight loss regime, right? I can't do the same habits and expect I'm magically going to get fitter. I need to be like Dion and go get on the bike.
Well, in some sense, lean startup principles applied to running, the business of the bank.
Yeah.
Jason, maybe to at the risk of taking a step back, you mentioned data availability is important and key in making better onboarding work. Are there some examples or some of your partner banks you might call out that have done a really good job of that?
Well, actually, one of the things we're undertaking as an alliance right now is we are building a shared anonymized database of customer data. And why would you do something like that? Because as one of our bank members said, at their size, they quickly run out of A's and B's in their A/B testing. And so by doing this, we can actually partner with several third parties around how do we actually enrich that data and then apply the principles of machine learning and artificial intelligence through some of these partnerships with some of the biggest providers around technology. Now, if you're listening and you just panicked at that, it's okay. That's not the next step. I would say you need to first focus on how do I get all of the data in the different silos I have into a shared place that I can begin to query it. You don't need to go get a chief data scientist or anything like that to start. But once you have that data, we've seen great application from folks like Total Expert on the mortgage side that take your data from your mortgage marketing and your mortgage sales process and actually merges it and has built-in user journeys. They're very popular amongst our members in terms of what they do associated to the impact it can have. It also gives you, once you have this holistic view of who your customer is, you can bring a holistic set of relationships and relationship management that has been very successful for several of our banks that had this realization that some of their biggest consumer accounts were also their biggest small business accounts. And oh, by the way, they also had, a wealth account with them. So again, getting a holistic view and being able to understand who they are and where they're transacting. Like one of the first things I would say to go look at is, it surprises me that more banks haven't done this. All 62 of our banks have at this point. Go look at who they're using to send money to, right? Like some searches, look through their ACH history. How much money is going to Venmo.com? If you're not a Zelle bank, how much is going to Zelle? How much is going to Cash App? How much is going to Coinbase, right? But look at these things and understand who your competitors are and where your customers are sending money to.
Yeah, I think I would go, a lot of the banks I talked to were really looking more at the small business. Coda and Rails both do a really good job of, instead of calling your customer, and I literally had a banker say this to me, yeah, we're having them fax over their tax returns. I'm like, what year is it again? I forget. But Coda, Rails, those kind of applications where you go out to your customers' QuickBooks and that kind of zero, whatever their accounting package is.
Data aggregation partners. Yep.
There you go.
Yep.
Right. But those to me are really powerful because a lot of the banks I've talked to say, you know what, Dion, we can't compete with Chime's marketing budget, let alone Wells or JP. We're good at small business. To Jason's point, they all say to me, the handshake. I'm like, okay, handshake's nice, but handshake plus data, that's concierge service. That's what your SMB customers demand. And that's what, if you don't meet that requirement, somebody else will.
Yeah. And I would say throw in there, as long as we're throwing names out, go look at Autobooks or on the the micro business disclosure where investors, Palo, P-A-L-L-O, which is how do you actually, for these small businesses that are family owned, how do you integrate their personal finance and their business finance? Because they don't think of those as two separate buckets of money, right? And so there's implications if you're a sole proprietor around taxes and stuff that it can prepare you for.
There are CPAs all over America covering their ears at hearing that, but I think you're right, Jason.
Yeah.
No, the first thing a CPA would tell you, knowing this from Intuit, is don't mingle personal and business. Well, very good. Look, a lot of agreement then around the importance, not only onboarding, but data, aggregating data, getting the data in a form and a place where you can start to draw important insights from it. With an eye on time, why don't we move to the second major question? What advice, panelists, or best practices would you share with the attendees today with respect to finding the right enabling partners, right? If we're going to focus on onboarding, focus on data, focus on generating insights from the data, how do you think about choosing the right partner, for what each of the attendees is trying to accomplish?
Well, you join Alloy Labs Alliance, obviously.
Can I take that as a cue, Kevin? Because
Go
and
ahead,
I
Jason.
think you're leading the witness, because this is one of my hot buttons, because we get this a lot where we'll have a bank come to us and say, we're focused on small business lending. Which partner should we use? And the obvious next question is, what problem are you trying to solve? And they look at us like we have two heads, that it's well, I told you, small business. Small business is not a problem, right? That's a category. And what you're trying to accomplish is going to drive what vendor you should go select, right? Do you just not have an online application and you want to make it more convenient? Do you need a way for them to start and stop? Are you trying to make it more efficient, right, on the back end? Like, is this really about automation on the back end? Are you trying to change how you're doing your underwriting? Are you trying to actually reduce the speed of underwriting and you're willing to automate? Each one of those takes you down a different path on who you should be partnering with, right? And so getting crisp at what problem am I trying to solve for whom is important. And contrary to popular belief, throwing more requirements into the RFP does not make a better RFP. It just means nobody actually meets it, right? You just kind of spaghettied this thing. So if you start from the functional spec, we're big fans of Clayton Christensen's Jobs to be Done. What job are you trying to do? Instead of putting together the 35-page RFP, just go out to the host of vendors and say, how would you solve this job, and compare that before you get into the, now show me your SOC 2.
Mhm.
I would go up the drain pipe even further and say, do a process audit. The number of banks I met with were like, here's how we do a wire. I'm like, this document's dated 10 years ago. You haven't changed any steps in your wire transfer process in 10 years. So I would say even go further up the drain pipe.
Yeah.
And beyond, what are you trying to solve for? How are you solving it today? What's
Yeah.
a better way? And I do like Jobs to be Done, but I'd love to hear from Alan how Encore does that. I mean, they're one of the better banks doing that kind of thing, engaging with fintechs.
I appreciate that. I mean, in my opinion, it does start with clarity around the outcome that you're trying to produce, to kind of let you under the hood a little bit with regard to Encore. As I mentioned in the kickoff, we definitely skew commercial. So I wanted to put that out there first. But relative to that strategy, you'll hear us talk about these three big rocks that we're trying to move. Not to oversimplify, but those three big rocks are drive tremendous commercial loan volume. Second, bring the core deposits alongside that, and drive, and then third, drive non-interest revenue. Not that those things are revolutionary or unique, but to produce the outcome that we're trying to, we've got a lot of clarity in terms of the outcome that we're after. And then once you really have clarity on the outcome and the strategy, that next tier, or that next level, or the next best action, let's call it, is to go evaluate the unique problems that exist underneath each of those strategies. And then then it becomes pretty clear as to the direction that you're pointed in. But I think it's really important, as far as takeaways for the group here today, is, first step is take some time, take a step back, think big with respect to the strategy and the outcome that you're trying to produce for, not only for your organization, but for your client set as well, whether they be commercial or consumer, or both in a lot of cases.
I'll jump in with a bit of suggestion with respect to data. And again, being an Intuit alum, I would encourage companies that are seeking third-party partners to help them aggregate small business data to think beyond the accounting data. At Intuit, we knew that there were lots of customers whose QuickBooks instance was accurate 4 days a year when the accountant was getting ready to pay quarterly taxes or year-end taxes. In the companies we looked at Coda, we've seen some very interesting companies that are leveraging alternative data sources. They're integrated into a merchant's Amazon account. They're getting feeds from a point of sale system. They're looking beyond accounting to a much richer, broader set of data. And in a lot of cases, it's helping those companies reach better insights or do better underwriting of those partners with much more up-to-date in many cases, kind of daily data. So I would think about the freshness and the quality of the data that you're accessing through the partners as well. All right, I'm going to
And
remind the
potentially
audience.
Kevin, go ahead. Sorry.
Oh, well, really quickly, audience, if you have questions or you want panelists to drill deeper on any of these topics, please get active on the chat or the Q&A and let us know what you want to hear. But Alan, please go on.
Yeah, I was just going to add to something that you said. I mean, in the spirit of creating that experience, we can talk about a lot of different things there. But you know, one of the big problems that exists in the commercial space is, you know, a colleague of mine started using this term years ago, but you know, time to money. Time to money is everything in the commercial space and in the consumer space, but I live more on the commercial side. You know, I don't know what the data would suggest, but I have to think in all the years being a commercial corporate banker, time to money is pretty slow on the commercial side. So, you know, being able for banks in the industry, Encore or otherwise, being able to, you know, ingest data, being thoughtful and kind of creative about bringing in other data sources that can help you evaluate a client more rapidly and more thoroughly. And you know, I'm a big thinker, and sometimes that gets me in trouble, but I would expect that the industry 5, 7, 10 years from now, the time to money is going to be a fraction of what it is today, as we start using data more effectively, bringing in macroeconomic data, let's say, to evaluate a commercial client and being able to extend credit in a matter of days or hours versus weeks and months, which is kind of where the industry is today.
Thanks, Alan. So we've had one question come up in the chat, and that is, on the commercial side for a new client, what is a reasonable expectation today? And, Alan, maybe why don't we first take that in terms of what is, kind of a reasonable or market underwriting window, and where do you hope to get it?
Oh, goodness. I'll start with the where do I hope to get it part first. And just by way of background, I came to technology from the business side versus, from the more technical side. So I grew up as a corporate and commercial banker, making all the corporate loans and selling treasury and swaps and FX and all the quote unquote products that a middle market client needs. So, if I had to guess, I wish I had some data to offer, but just anecdotal experience, time to money is 4 weeks, 6 weeks in a lot of cases. By the time you as a banker, get the information that you need, which is financials, agings, inventory reports, personal financial statements. It's a long list of things. By the time you get the information that you need to be able to make an adequate decision, you're several weeks into the process. And then from there, you're several weeks out to be able to evaluate that information and be in a position where you can have a conversation internally, about extending credit. So I hate to say it, but it's 4 to 6 weeks. I would guess today in the space. Where I think we can get it, which is more important as an industry, should be a matter of days, in my opinion, because that's what the small and mid-sized businesses need to get deals done. Time is probably the greatest enemy to a deal, because the more time that passes, the higher likelihood that opportunity that company has is going to pass alongside of it. So I hope we can get that down.
Yeah, I was going to say there's also an adverse selection process, right? If others are using technology to get the deal done faster, the likelihood I stick around with you in a painful process likely means that it's because I can't access capital elsewhere, right? So many of our banks have broken the 4-week barrier. Many are getting down to the 2-week barrier. is what they see as the reasonable time. Now, keep in mind, that's 2 weeks for something that's relatively, pristine and things check out. And another is through automation on their smaller commercial loans. And so that's called the sub 5 million, trying to get it down to measured in days.
Mhm.
And the other key to the question, and I'm glad he capitalized new, because my hope is some of the other things I talked about sharing your small business data is that on a go forward basis, your working capital lines and those kind of products, instant, because we know your business. We track your business. We have analytics on your business at all times. But
Only
new
if you have
clients, yeah.
access to the data.
Continuous
You know what?
underwriting
I'll
for
circle
existing
around.
clients.
I'm probably going to agree with you, Jason. A data strategy is probably a good first step for any bank.
All right. Let's move on to the next question. Panelists, what advice and best practices beyond what we've already talked about would you share for managing projects and partnerships to successful outcomes and long-term success?
I'll take that first. It's a tough one, and I'll tell you why. Because so many times they don't do the homework up front to know why they're going into it, right? So they go in with wrong expectations. They come out with poor outcomes. Well, shocking. I know strategy is a dirty word to a bank that has a $200,000 tech budget. But the fact is, without that upfront strategy, you're going to make mistakes and you're going to engage the wrong team, wrong reasons, all of that. The other piece I would say is hire for the skills that you need today, right? So many of the banks I meet with, 20-year folks running around doing stuff, and they're just handed the tech project. Hey, Bob, you've been a great employee here. Go run this Encino implementation. Bob's like, I was an auditor for 18 years. Okay, let me do that, right? So align the skills, the goals, the outcomes, but start with a strategic look at what you're doing. Because if you don't, you're going to be throwing just good money out the window. That's my take.
And can I build on that to say it has to be a real strategy. Like go back and you read a paper of Michael Porter's called Competitive Strategy, to Alan's point, that too often what's called a strategy is a list of, key metrics and projects to be done. That's not a strategy, right? Strategy is as much choosing what to do and what not to do and who to do it for. One exercise we work with banks one-on-one is we have them overnight say, tomorrow you have to fire half your customers. Which ones are you keeping and why? Right? In terms of you can't do everything. And too often we see, we try and do everything. And a community bank looks like a miniature version of a big bank, just operating at subscale with a smaller budget. And right, like to date, it's worked pretty well, but in a digital world, that doesn't hold up anymore.
So pick the customers, pick the capabilities, be focused, be differentiated.
Yep.
Remember, people don't buy better, they buy different, right? Why are they choosing your bank over another bank, right? Sea of sameness is one of the most dangerous things for a bank, a hotel, an airline. United, Delta, whatever's convenient, I'll go with that, right? Don't become lost in the sea of sameness. Differentiate your bank.
All right, attendees, one way that I could see banks differentiating would be to have more streamlined onboarding. Would be interesting to hear from the attendees. Do you think your bank is differentiated, or are you in the sea of sameness, as Dion notes? Moving on, next question: what would be common pitfalls? We've talked about a few of them, but what are some of the bigger mistakes or the more easily avoided mistakes that you've seen? What advice would you give to leaders at banks? And I think we have literally a dozen CEOs and CFOs on. What should they not do?
I'm going to start with this. A bit of a pet peeve for me is when a banker says, I'm going to do digital transformation. I'm sorry. One, I don't know what the hell that means. Two, don't boil the ocean. Pick a project. Pick something simple you can win at. And the reason for this is twofold. One, you want the board to see that you're doing some cool stuff. Two, you want your employees to get on board the digital train. And if you try to do everything at once, if you try to boil the ocean and too many things at once, they're all going to fail. People are going to back away from digital. Don't do digital transformation. Do digital things. Jason brought up something I'm working on now, which is jobs to be done. Digitize wire transfers, digitize onboarding, digitize lending. Pick things that are measurable, small enough to win, big enough to matter, right? That's the one thing. Break it up into parts so you get these small wins along the journey.
I'm
Alan,
gonna
you
get
want to
myself
go?
in trouble here, but yeah, I'm gonna get myself in trouble here. But look for the leapfrog, in my opinion. I mean, too often we kind of default to status quo. Go out and find technology to solve today's problem. That's just going to solve today's problem. I love treasury. I think it's sort of lifeblood of a middle market client. And I've seen studies today where, middle market clients, we're talking, in banking, you're talking about a lot of manufacturing, distribution, some service-based businesses, but, the treasury technology is good today, but, I think we'll see some leapfrogs in the future where, banks and other organizations are going to find that leapfrog opportunity from a technology perspective. And I would encourage looking for that. You're not going to be able to do it every time, but what's the sort of status quo? What's going to get us there? Solve today's problem, but what is the leapfrog opportunity where we could really separate ourselves?
Yeah, I absolutely love both of those, and especially Dion, you need to do something. Go pick anything, because when you try and solve for everything, to Alan's point around leapfrogging, by the time you've put together a digital transformation plan and you're 18 to 24 months into it, the world has moved and it is no longer relevant. So try and jump ahead of it and jump ahead to, a better lily pad than, where you are today versus that incrementalism. Otherwise you're back to Jason's weight loss program that he does the same thing over and over again. I can't figure out why it's not losing weight.
Sounds like my program too. We've had a question posed by an anonymous attendee, and it's how can community banks compete in the digital mortgage world against Rocket Mortgage or Loan Depot?
I mean, back to customer intimacy is you better know that they're looking for a mortgage before they're shopping for a mortgage. I was doing a talk for the FDIC 2 years ago, and it was an academic focus thing. And one of the academics did this study that showed that Rocket Mortgage is actually on average 35 basis points more expensive than what you could get for a community bank. And bankers, all being rational folks, and especially ones with an academic bent, were just shocked. Like, how could this be? Why, would somebody choose to go to Rocket Mortgage if it's more expensive? The expectation was, well, because of all of this technology, they can actually probably do it a lot cheaper than we can, and they're going to win on rate. No, that's the counterintuitive thing is no one wakes up in the morning and goes, you know what I want today? I want a mortgage. No, it's Dion woke up and he said, I want to, buy a different condo, or I'm going to move, I'm having children, or my children have left. There's a story arc that you need to understand. I commonly call it the edge of money, right? As banks were used to being at the center of money, the money coming in, the money flowing out. And this is true of small business, right? That small business owner and even the commercial customer, there's a story arc that is outside of the financial transaction or the financing vehicle that we're talking about. And if you're not actually participating in that, using the data to create customer intimacy and to understand where they are on some journey, you're always going to lose.
I'll give a perfect example. I've been banking with the same bank for years. And actually, to Jason's point, I'm literally buying a condo as we speak. And my bank sends me refi offers all the time. I'm like, I've been renting for 3 years. I write a check to a guy for the same amount every month, not a mortgage company. How can they not know not to send me refi offers? To Jason's point, that's the intimacy people expect and seem to get better from other providers. The other point, Rocket Mortgage, they can get away with it. You know why? They advertise well, they service you well, they make it seem like a great experience. Most people, I can't tell you what my rate is, and I just signed paperwork yesterday. I don't know my rate. I'm not a rate shopper.
Yeah, right. And I think you remember this, Dion, when we were talking about our relocation to Minnesota. the reason, even knowing that I'm paying more for Rocket Mortgage, got my first mortgage that I later went through and did a refi on. Why? The problem Jason was solving for was called don't get divorced, because the pre-approval had expired in the 6 months that my wife and I were looking for a house, right? Called the community bank that had given me the pre-approval, and they said, no problem. It will probably, just take a week or two to get that, just resubmit all of this other paperwork. That leads to divorce. Rocket Mortgage got me an answer in a pre-approval in less than 24 hours.
Right. Job
On
to
a
be
weekend.
done, maintain marriage.
Yes, exactly. Because losing house in hot market equals,
Oh.
Jason continuing to live in his parents' basement.
Exactly.
I'll remind attendees that Jason is an expert on bank tech, not a marriage counselor. But Jason, I think you're right. Rocket Mortgage, they're able to charge a premium because they offer convenience.
That's right.
And they've made it easy for you to get data in. And I think they are themselves leveraging the data strategy that our three panelists have outlined today. Around Christmas time, they acquired Truebill, which was a Coda portfolio company, a PFM solution. They're leveraging that to gain more information on their customers and to be able to do that kind of marketing at the point of need, based on understanding the customer, based on what they see in your PFM data.
Kevin, I think there's some a couple other interesting aspects of, to the anonymous mortgage question, which I'm glad that was asked. I mean, if you think about some of these local markets that people, people are in, whether I happen to be in Austin, so I'll kind of comment on that, but, mortgages are different here. And in many of these, great American cities where, home prices are exponentially going in one direction. And so, so a lot of these mortgages don't fit a traditional box. They end up being portfolioed in a lot of cases, and certainly above where your mortgage group can bring in an investor in the secondary market. So, I think an extension of the points that have been made, like personalize that service, make it local, deliver a product, ideally digitally, but if there's some manual stuff that happens there too, like deliver the right solution, for the market and for the people is ultimately what it's about. And if you don't have a completely digital end-to-end solution to handle a larger complex mortgage, Band-Aids work, duct tape works in some places, but deliver
you
the
still
right
need
solution.
the data to know, which
Yep.
you want to do and where the demand is, I would assume.
That's right.
Yep.
No, that's a
Okay.
great opportunity, though. The hot housing market, Alan, that's a really good point. I'm going through this now in Northern California. I just walked away from earnest money on a house because I changed my mind and I wanted a different place. And had a bank been partnering with me on that journey, customer for life, right?
Mm-hmm. It's a great point.
Panelists, in the interest of time, I'm going to shift to one more question. If I'm an attendee and I want to find one of you at an event, a fintech event over the next, 3 to 6 months, I'm too shy to ask my big question today, but maybe at the panel in a smaller setting, I'll have more confidence to pose that question. Where can the audience find you over the next, 3 to 6 months at interesting fintech events?
Well, Money 2020 in the fall, that's a must do. And by the way, I hosted this last year as 40 grand. I hosted a session just for community bankers, and I had some people talk about RTP and data and all sorts of good stuff. It was fantastic. But I encourage everyone to go to Money 2020. Don't go to your old bank events. Find some cool fintech. Lendit is a good one. Look, I know AOBA is the big event for community banks. I still laugh that your event is literally called Live or Die, or Acquire or Be Acquired. But get out of your comfort zone. South by Southwest is coming up. I don't even go to that. That's the tip of the iceberg. Go to those events, right? Do the events where thinkers are, not just people who are going to tell you how to increment your bank 5%. But you'll find me in Money 2020 for sure. Fintech Meetup is this week or next? Next week, right? Good event. You just meet people, talk real quick, go. Jason?
Well, Al and I will be hanging out at South by Southwest next week. And if you
Jealous.
are interested, and you can normally find where we're speaking, but non-public URL, if you go to www.alloylabs.com/XWSW, so South by Southwest, you can see we are hosting a FinTech house. We have about 300 people at our FinTech party. Let's see, after that, I will be at SP Global speaking at their community banker conference, then speaking at Finovate Spring in San Francisco. And we'll be speaking at the Debt Collections and Automation Conference in May in Las Vegas. And that's about as far as my memory can go right now, but that's where I'll be for the next month and a half.
That's pretty good. Yeah, South by is definitely on the radar at the moment. South by Southwest is an interesting one, and I think the point is think outside of your day to day. I mean, there's plenty of great banking specific conferences that we can go to, but certainly Finovate, Money 2020, South by. It will definitely get you out of your day to day. But I also think there's some interesting things, to the extent that you have an opportunity to get outside of the U.S. Take that opportunity, because there are some really interesting things happening in Western Europe as it relates to money and payments and banking. It's a different animal because you got a bunch of countries jammed together who are trying to figure it out, but ultimately much of what happens in Europe will, invariably makes it to the States. So taking that opportunity to get some kind of early visibility into what's going on in other places is very important in my mind.
That's a great tip.
Yeah. And especially now that so many of them are virtual, pop into some of these places. And if you're curious on Dion's point about why you should go to South by Southwest and things like that, I wrote a post on that I just threw up in the chat 3 years ago.
All right, another question came in through the chat. Did anyone attend ICBA conference last week?
Yep. San Antonio is too close to Austin to not go to that one. It was great. I admittedly crashed it. Just hoping to connect some people that I hadn't seen in a long time, and so many people that we've met over the last couple of years have been 2D on Zoom and Teams. So just taking the opportunity to go down to San Antonio allowed me to connect with people I hadn't seen in a while and meet people in 3D that I had never had that opportunity to before. So it was really good.
Well, I like that, meeting people in 3D. I'm going to use that.
All right. Last call for questions from the
Michelle
attendees.
Nealon, hoping I answered your question on what came after the / for Alloy. You can see it in the chat.
There you go.
All right, last call for questions from attendees for the panelists. Otherwise, we'll give everyone a few minutes back of their day. All right.
Very good.
Well, a big thank you to Alan, Dion, and Jason, and our friends at Quick Rate for hosting the event today. Thanks, everyone. Have a great week.
Thanks, everybody. Have a great day.
Thanks, everyone.
Thanks, Joe.